Thanks for tuning into the All Points Network podcast. My name is Mike Schroeder. I'm joined by my co-host, Skyler Steinke. And today we have David Morgan here joining us. David, thanks so much. And just a quick background on David. David has spent over 4 decades warning that the greatest risk to your wealth and your freedom is the failing financial system. David's here to unpack money, markets, and mining. So we're going to be talking about gold. We're going to be talking about precious metals in general, and kind of the market as a whole. So, David, thanks so much for joining us.
My pleasure. Thank you.
Absolutely. Let's start from the beginning. So, where did your investment journey start? How'd you kind of get into the market?
Just fascination with money as a young child, and I was trying to figure out how in the heck do you build, skyscrapers and sports stadiums and stuff like that. Because from my cursory understanding as, like an 8, 9-year-old kid, it's like, well, you just have to save up your money and then you buy something. But, who can save up enough money to put together, sports arena? So I started looking into it on my own, and I discovered, banking and how the whole system worked. And so at 16, I asked my dad that I wanted to start trading stocks, and you can't. You have to be 18. But in California at that time, it may still exist, I don't know, there's what's called the Uniform Gift to Minors Act. And in that Uniform Gift to Minors Act, if your parents sign a document with the state, it'll allow your child at 16 to open up an account and start trading stocks. So I did. I was 16. I'm starting to trade the Dow Jones. So obviously, I was very motivated at a very young age to engage in the markets. And from that point, much thereafter, started learning more about, what was in the monetary system, how it functioned, as I said. And the coinage changed when I was 11 years old. It went from, 90% silver coins to what I call Johnson slugs. And that really impacted me, just not like super significant. I don't want to over dramatize it. But it was interesting because I knew inherently that a silver quarter had to be worth more than this copper thing. And yet none of the adults seemed to pay any attention to it. So that's when I started to dive really deep. So by the time I was like 18, I was pretty self-studied and, let's say a cursory view of monetary history and the ups and downs of the great inflations and what caused the financial collapses of the past.
What were you trading at 16?
The Dow. I was trading the Dow Jones.
Trading just like equities or?
Yeah, equities only. I didn't have a futures account or options account, just equities.
Yeah, cool. Did you blow it up at all?
What's funny is I thought about, if I just left that alone, whatever was in there, $100 till now, so many years later, where would that thing be?
Yeah,
pretty darn significant.
Absolutely. Well, you learned a lot as a young kid, and obviously in your teenage years. What kind of really formed your thesis over time? You obviously got into precious metals. You talked about that, but what kind of was any other catalyst that came your way? That people or mentors that said, "Hey, this is how we think about things that are maybe more contrarian than the status quo."
Yeah, absolutely. I mean, what happened was as I continued down that path, I read more and then I found out about what's called, these investment conferences. And one of the guys at work had attended one, and it was a hard money conference. So I'd already been kind of interested in, how gold and silver played into the monetary system in the past and what it might hold for the future. And at those days, there were cassette tapes. Some of your audience may know what those are. Yeah. And so this guy would give me a cassette of one of the lecturers during this investment conference to play in my car on the way home for my commute. And I listened to every one of them. And some of the notables of the past, some of these guys I would say were definitely mentors. And one that I listened to that had the most profound impact on me was named Jim Dines. And he wrote the Dines letter, and he called himself the original gold bug. Mm-hmm. And so I put that tape in and I played it, and I was like, whoa, this is like way beyond what I was expecting. So when I got home, I played it for the second time, and I'll never forget the opening. And the opening goes like this: all that exists in the universe is truth or resistance to it. Hmm. And in the time I've made that statement, you've been lied to, because the government has printed more money, more currency, and they are watering the milk. and the lie never works. And then he went on with his lecture. So I thought, wow, that's profound. And that was really the impetus to get me into the financial report writing business that I've done for so many years now. And without that kind of, I'll call it a wake up call or whatever you'd like to name it, had such an influence. It's like, I want to do that. I want to get, not so much get on stage and speak, which I've done for years and years all over the world, but just have an impact on others' lives. And why money? Well, I was interested in it from the beginning, as I explained. And money touches everything. It transcends everything. It transcends nation states. It transcends religious beliefs. It transcends sexual orientation. Transcends education. Transcends everything. Everyone is interested in their money, whether it's US dollars or Indian rupees. Everyone is concerned because without money, you really can't function in this world. I mean, there's some very few exceptions, maybe in an Aboriginal tribe or something like that. For the lion's share, the most part, we all need money. People that have a lot of it, they're very concerned about losing it or who's their true friends. They like it for their money or they like it for themselves. And for people that don't have enough, they're always concerned about getting more.
Yeah,
100%. With so let's talk about precious metals. So with the recently we've had some interesting runs. Let's talk about you've been at this for a while. Talk about kind of when you started in the industry. What have you seen over time with gold and silver and other metals?
Well, one thing that most people don't know, I mean, I've been interviewed, so many times I can't count, but a lot of, let's say, people that are not acquainted with monetary history, people that don't know that all fiat systems fail. There's 100% track record. So the idea that this one's going to continue indefinitely, odds are against it. But the real bottom line is that most people don't know that if you held a gold position, that you would do far superior, not I would say far superior, but you would outperform bonds and stocks, depending on the starting point. But almost any 20-year period or greater, you'll outperform. And most people don't know that. They think of gold and silver as being very, very risky. And in the short run, they can be because of the high volatility. But over the long run, gold actually performs better than anything else. And it's not gold that's really performed. Because what's so interesting when you think about it is gold is the constant. In fact, one of the best books ever on the topic was Professor Roy S. Janstrom. And he wrote a book called The Golden Constant. And what he proved in that book, and he did a lot of research on commodity prices throughout centuries, is that an ounce of gold basically bought the same basket of commodities always and everywhere. It was the prices that changed. So when you say, the price of gold has gone up, that's true. But if you think about it, the gold ounce is still a gold ounce. That's the constant. What's changed is the price. Why? Because the dollar has deteriorated so much. If you had $1 million in 1913, you would have $1 million today, which wouldn't be nearly the purchasing power. But if you had $1 million in gold, that would be $20 per ounce back in 1913. And now it's $3,400 the ounce. So you're looking at that, multiple, which is humongous. Yet that ounce of gold is still the same ounce.
Mm-hmm. Well, it was interesting. I'm just you think about that, and to your point, David, with inflation, to your point, you had $1,000 US dollars now. Would it roll with 90% of it purchasing power be gone in current?
Well, the 1913 dollar, the Federal Reserve will tell you it's worth about 2 cents.
Okay, that's a big deal, right? People don't realize that.
Yeah. Well, if I could just interject briefly, and I want to do the interview, and we're doing, I'm having fun, but one of the, I can't name names, but one of the best top tier wealth managers from Europe associated with a major New York brokerage firm. We had a little chit chat, and you did not get into his account unless you had an account of 10 million or higher.
Yeah.
And he said, David, I just should have put them all on. He worked their account and got him in NVIDIA and this and that. And he did well. He did well for his clients. He's very good at what he does. Mm-hmm. But he and I both knew that basically if you wanted to take, I won't say the lazy man's approach, but let's say the historic standard of wealth building or wealth preserving, just stick it into gold would have done just as well as anything else he did. But most people, again, are resistant to that message because you never hear that message from Wall Street. And there's a reason for that, of course.
Yeah, a lot harder to get fees on a hunk of metal.
Right.
What do people not understand about metals?
Well, I think one, how important they are to balance the portfolio. There was a study, there's several done, but one of the best that you can look up and verify for yourself, take my word for it. It's called Ibbotson and Associates. A friend of mine, Nick Barashef of BMG, Bullion Management Group of Canada, paid for this study. And they did a portfolio analysis of how much precious metals, if any, are needed for the best performance on a portfolio. And they came out under all conditions: inflation, deflation, depression, hyperinflation, you name it. There's a 15% weighting in metals, not mining stocks, but metals themselves, actually had the best balance of performance to risk, if anything. So in other words, you really need it. You don't have to go overboard. You don't have to go all gold. I never have advocated that, by the way, ever. But you do need, if you really want, especially for the safety factor, when you get at the end of these great inflations. I mean, right now, you ask me what's a $13 worth, less than 2 cents. So we're arguing now about the last 2% of something. How well is it going to do in the future? And I say, I don't know. But the trend is obvious and probably not that well going forward.
Mm-hmm.
Yeah.
There's a couple different ways I want to take this. So I guess I'll just start with what is driving demand for precious metals right now. So like we kind of alluded to earlier, gold just recently broke its all-time high, or recently in the last year or so. Kind of what's driving that change right now?
Well, as you know, all markets move on supply and demand. And so if there's more buying pressure than selling, the price goes up. If there's more selling pressure than buying, the price goes down. It really is that simple. So you have to ask, maybe deeper, where is the buying pressure coming from? And the buying pressure is coming from the central banks, because the central banks know the inevitable, and they know that all fiats fail. And because of that fact, they're preparing themselves as bankers to have the reserve asset of all time. In fact, the late, great Jim Dines, referred to earlier, called gold the monetary hitching post of the universe. In other words, the banks know. So I started talking almost 2 years ago now that the run to gold had begun. And this is back when gold was about half the price it is now. So, well, it's having a hard time getting over 2,000, David. I said the run has begun because the banks are buying gold hand over fist at a rate they haven't done in 50 years. And usually the run to gold goes from let's say, a very light walk to a normal walk to a brisk walk to a light jog to a full jog to a fast jog to a light run to a full run to an all-out sprint. That's a great analogy for how the run to gold begins. So the people, the light walk, are the smart money, the big insiders, the sophisticated investors, the money managers, the banks. And they're already loading up on gold. Now the public is starting to catch up.
Mm-hmm.
But most of the run to gold so far is still the big institutions. It's big money. And finally, I'll say, which is ultimately important, is what happened with the sanctions in Russia. So when this Ukraine situation started, the United States, in their, let's say, well, I won't comment with an adjective. The fact is that they cut off $300 billion that belonged to Russia. And so other nation states said, wait a minute, they're going to do that to Russia based on their political ideology, their thoughts about war, defending themselves, taking over the country, whatever, however way you want to slice it. It brought a wake-up call to other nation states. Say, wait a minute, the United States doesn't like what we're doing. What if they cut us off? What if they void our deposits? And so I think that was a huge mistake that's more perverse than most people really realize. Yeah. And that, of course, was about the time we really started to see the run to gold from major banking institutions.
Right.
Yeah, totally agree. That was, I think, a very short-sighted move by the U.S. And obviously a lot has happened since then.
Yeah.
Do we have the gold in Fort Knox?
Not sure. I doubt it. There is a guy named Bill Still that wrote The Secrets of Oz, which is a DVD you can watch on online for free. Talks about the real truth behind Frank Baum's book, The Wizard of Oz, but I digress. Bill looked into it, and he, like me, gets a lot of people that have opinions, and that's fine. But one of them was a guy that said, there is no gold in Fort Knox. And Bill did his normal gentleman, polite thing and said, well, that's fine. That's great. Just send me some documentation. Send me something I can sink my teeth into. The guy did. And he brought forth a lot of information to Bill that pretty much indicated that that gold either was loaned, leased, or hypothecated in one way, shape, or form. And that even if the gold was located in Fort Knox, location does not prove ownership.
Right.
I've got some gold at a facility. It's got my name on it. It's a segregated account, and I own it. Yet it's not here on this property. It's somewhere else because it's located there. Somebody say, "Oh, it's his gold because it's located at XYZ Vault." But no, I own it. So we could have all the gold in Fort Knox. I doubt it. But if it were there, still we don't know for a fact if that's ownership is the U.S. Treasury or the Federal Reserve or a nation state or an individual, or it's been loaned out 3 or 4 times in a derivative manner. We really wouldn't know.
Yeah.
Yeah.
Yeah. That's interesting. We other I think it's Sprott funds, that was kind of the PSLV and the gold kind of allocating physical gold versus GLD and the ETFs. That was kind of that narrative back in the day too. I know that people had cause for concern of what was actually in the vault. Therefore, these ETFs were created, right? I guess that's the story. But yeah, I'd love to hear too your thoughts on. Obviously, we've been talking about gold and precious metals, but specifically gold versus silver. How does silver come into the narrative here? And what are your thoughts on silver?
Well, I've been known in the past as one of the more knowledgeable of silver, and that's I mean, I have studied silver more than gold, but I study them both. I study all the futures, all the commodities, and the big pictures we've been discussing. But silver to me is much more important than gold, and this is very difficult for most people that don't study the silver market to wrap their heads around. But I just got back from the money show, and I discussed silver, and I basically talked about um, how important it really is. And I went through a little exercise on what would happen as a thought experiment if we lost all the gold in the world tomorrow. And basically, if that were to occur, the world would go on. We would really, be hurtful to the banks, be hurtful to people that own gold. It would be a bit disruption, but nothing would really change from a day-to-day perspective. But if we lost all the silver, everything would change. We'd go back to the Stone Age. We'd have no cell phones, no computers, no electricity, no solar panels, no flat screen TVs. None of the whole technology that we've seen over the last 150 years would just disappear. So silver is far superior as far as its place in day-to-day existence than gold is. And silver still has a monetary property. Certainly it has an industrial use far more than gold does. But it's something to do with the fact that its utilization is so important that decades ago there was a situation where a group got together called the Silver Users Association. There's been no users association for any commodity, to my knowledge, for oil or cotton or cocoa, or lumber. But for silver, the Silver Users Association band together for the purpose of making sure that the price of silver could be managed in a way that was more beneficial to them as silver users than, let's say, the free market might dictate.
That's interesting. So there's obviously there's obviously many more use cases with silver than gold, right?
Yeah, silver has more patents on use than any other commodity in the world, with the exception of oil. Oil, of course, energy is far more important than silver is. Without energy, nothing happens. But if you factor oil out of it, the next commodity on the periodic table or element is silver, and it's got not as many as oil, but more than anything else by far.
Yeah.
Yeah. Do you think kind of talk to us about what you've seen in terms of like the markets and, paper trading? Because I know from other, metal bugs that we talked to, it seems like the market's maybe been manipulated.
Yeah, I mean, I wrote the book, The Silver Manifesto, which was like an effort for the academics. It's really, I mean, anyone could buy the book. It's a niche market, but in that book, I go through, proving if silver is manipulated or not from an objective viewpoint. And I use a Sharps ratio, which is a very accurate way to determine whether a market is a random walk or not. And if you do Bernie Madoff, you'll get a Sharps ratio. I forget the number; it's in the book. But if you look at the silver market, it's about double the Sharps ratio Bernie Madoff. I mean, it's so obvious this market is not a random walk; it's beyond dispute. Yet, very few people know what a Sharps ratio is. I'm not going to explain it to you. You can look it up on Google. I don't want to misstate it, but that's the situation. And not against hedging, and really the commodities rules are set up, I would say, pretty fair. The problem is they don't adhere to them. The Futures Exchange Commission really doesn't put the players' feet to the fire where they're not hedging, they're over leveraging, speculating, and manipulating. And this has been proven numerous times. You'll never see the word manipulate in the court filing. It's always spoofing. So, let's say, I won't say extremely bright, but extremely picky or extremely legal eagle types. So it's never been manipulated. And from the legal perspective, from a court mandate, or let's say a legal filing that's been adjudicated one way or the other, you always find the word manipulation. You will see spoofing. So I think spoofing is manipulation, but if you don't, that's fine. The point is that there's been heavy fines paid for spoofing. People have gone to jail for spoofing, and spoofing does occur. That's in the record. So call it manipulation or not, the markets are managed, and that's a different word. I like that word because my take has always been you cannot manipulate the major trend. If you could manipulate the major trend, gold would still be at $35 an ounce. It's at 35.
Right.
You could manipulate silver, still be $1.29 an ounce. It's at $39. So you cannot manipulate the long-term trend. Within that trend, can you manage the price? Yeah, you can.
Yeah, that's a good point. And actually, on the note with silver, so I'm gonna share my screen here. I was looking back at this chart, ahead of our call. So this is a monthly chart of silver. We hit, its all-time high or previous all-time high back in 1980. It's kind of maybe broke its all-time high there. I don't know how great this data is, but kind of broke its all-time high in 2011. It looks like we're on pace to maybe retest that in the next couple of months. I mean, what are your current market thoughts on silver here?
Yeah, I want to back up slightly. First of all, I did an article for my weekly perspective. It's me and the mic, one man and a mic, and I called the weekly perspective. I pointed out to everybody that the January 19th silver high at 50 was about 3 minutes long. So people that say it hit $50 are correct. But it's ridiculous to me, it's ridiculous to sit there and say, wait a minute, $50, 3 minutes? Come on. Now, 4 traders have told me maybe an hour. So it didn't even do the full trading session. Now, that doesn't mean it didn't spike high. It did. By the way, for the record, the 2011 high was not 50, even though your chart shows that, and you were very smart, Mike, to say, I'm not sure about this chart. It might show intraday, but it closed at below 50.
Yeah, kind of give or take. It's roughly.
Yeah. But the answer you want is, will it do it in the next 2 months? The answer is, I don't know. Do I think it will? Probably, or I'll say more possibly. I think we have a little more work to do. I think we're going to consolidate here. And I think we've got a battle going on between the US dollar and everything else. And, Powell isn't really backing down. I mean, they have a choice, really. The choice is you can destroy the currency, which has always happened in all fiat empires. And that means everybody, because the dollar loses its value. We go the way of Zimbabwe, the starving billionaire,
Yeah.
And so you've got $100 million, but all it does is buy 2 loaves of bread. What good is that? And when you hyperinflate a currency, you've lost all confidence in the currency. Whereas if you do the more, in my view, moral approach, and you actually strengthen the dollar where it still has value, you are going to destroy the bond market. I would say destroy, but let's say upset the bond market, because the free market's going to set an interest rate that tells the population what the true rate of inflation is. And when you have a high interest rate, it absolutely takes the bond prices down to, I'll call it reality. Let's say that we get a interest rate of 12% or something. Well, that's going to take a lot. That's deflationary as all hell, because there's so much, whole system is based on the treasury market. Primarily, I mean, it's really only 60% of foreign exchange now. It used to be about 80%, but I digress. Point is, with no dollar, you've got no. But if you're able to save the dollar, you're able to save the financial system. If you let the dollar go and you start putting interest rates down to zero interest rate policy, basically you're setting yourself up for maybe not a hyperinflation, but a high enough inflation where all trust is lost by the sophisticated. And that goes back to my walk-run analogy, where the smart people run for the exits, go all gold, and say, that's it. We're going to blow this thing up. So what is going to take place, in my strong studied view, is before either of those occur, we're going to transition to a new system. And the new system will, one way or another, jubilee the debt, blow it away, repurpose it, put it on gold and make it 50 years payable out, restructure it. There'll be all kinds of things, probably a combination of several I just named, and we'll roll over and start over. And that will be the new system. And the new system will have all kinds of accolades of how much better it is and how little cheating there'll be. And there will be some aspects to it that probably are likable by everyone. But the problem is it's more control, not less. And as I said, as my main thesis, a free market system, honest money, is a proponent of freedom, whereas the opposite, where you have total control of the monetary system, you have total control of the people, and basically it's tyranny.
Yeah.
On that vein, in a world pursuing digital currencies and CBDCs and all the different nuances there, how does silver and precious metals act as a safeguard for personal sovereignty? What are your thoughts on that?
Well, it's just like a house that's off the grid. I mean, if you go back to Thomas Jefferson, even he talked about freedom as being agrarian. I mean, if you were self-sufficient, you had your own food and your own animals and, your own shelter and all that, basically you didn't need a government whatsoever. And I'm not anti-government, but I am for self-reliance.
Right.
I am for thinking on our own, standing up on our own feet, standing for principle. And so with that in mind, they're the off-the-grid currencies that have lasted for thousands of years. Hey, what a concept. So it's a transaction where I could walk over to Mike and I say, I really want to, buy this from you. Will you accept, silver for it? And I say, yeah, now we negotiate a price or an amount, weight of silver. And I say, fine. And we agree. And I've got whatever the item is that he feels he's making a win-win. That's what all transactions are supposed to be, a win-win. It's where he feels he's making a more value adjustment by getting the silver, and I feel I'm making a better value adjustment by giving up the silver and getting the item. But in today's world, that doesn't occur that often. There really isn't, let's say, the voluntary exchange that really we could or should have in a more, let's say, level playing.
Yeah. Do you see any compatibility between digital assets like tokenized treasuries or yield tokens and traditional precious metals in a portfolio? What are your thoughts on that?
Yeah, it's still somewhat pro. I was involved with a digitized gold and silver system, put a lot of time and effort and energy and money of my own into it.
Mm-hmm.
And it failed miserably. It turns out to be not on the up and up. And I'll just leave it at that. I don't want to put myself in a libel or slander situation.
Yeah.
But there are others out there, and they seem to be focusing. Well, the thing I like, first of all, I've always advocated it's higher risk, and it's a tool. And don't put all your gold and silver into one.
Yeah.
But having that tool means you could put in, I don't know, use a modest number, 5%. Now I really have a really nice tool because I can pay in the gram or the grain. So when Mike says I need, $13.22, that's pretty hard to do in silver coin. But digitally, it's a press of a button. And he's got $13.22 worth of silver. I've given up $13.22 in silver, and we're both happy campers. So I think that concept of it's obviously great. And it's also a protection. You don't have to carry that silver across the street or whatever, or gold or whatever.
Yeah.
So from that aspect, I'm still very favorable to it. What I'm unfavorable about is, I've been bitten pretty hard, and people that, follow me into this. But, I've never said I'm perfect. And, you don't know these things until you know. But I don't want to go down that road too far. But as far as the concept, I think it's a very useful. And the other part I want to add on, because I was asked to speak to the World Gold Council, and they were looking at this project. Thank God they didn't do it because of this failure. But the thing that one of them really liked is what I advocated is back to the let's say underdog stance I've had most of my life. So you could be in Mexico and buy silver by the gram, right? You don't have to have 20 pesos to get in the silver market. You could have 1 peso and buy it. And there wasn't a barrier to entry where there would be in a coin shop. Well, wait a minute, there's 1 ounce and I got to mark it up and that's all I sell and blah, 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 blah. Like you could buy it with very little friction, very little premium, and start stacking silver by the gram or whatever. So this would allow anyone on a global basis to go ahead and get into the precious metals market and prevent the devastation that inflation does over time.
Yeah. With kind of following up on that with cryptocurrency. So, it's question prepared. When it comes to like gold versus Bitcoin. So, obviously something we got to discuss here. So, both of them to some degree are kind of based on a doomsday scenario. The beautiful thing with Bitcoin is kind of, shit goes to hell. All I need to remember is 12 words. And, I have that Bitcoin. I can bring it anywhere. When it comes to gold, even trying to travel with 100K in gold is probably going to be pretty difficult. It's prone obviously to being taken from you. I'd love to understand kind of how you think about the two together. And do they both belong in a portfolio, or is gold kind of your primary vehicle in this scenario?
All right, you put me on the spot. So first of all, let me get on the record that if I am who I say I am, and I'm a free market thinker, then obviously if you like Bitcoin, buy it. You want to be a Bitcoin maximalist, be a Bitcoin maximalist. It's not my job to tell you how to invest or how to think.
Yeah.
I might want to influence your thinking, but I'm not going to try to. Having said that, I'd say there's 2 things to look at. If you go back to 2014, I was asked by many people because they trust me. They, a lot of them all sound egotistical here, maybe, but they said, what does David think about Bitcoin? And I wrote an article, my 2 bits about Bitcoin. And I've read that recently, and I'll stand by that article still to this day. And that was 10 years. As far as going further, I did a series that's on my blog. You go to themorganreport.com and you go to the bottom of the page and you go to the blog. You'll have to go to the search engine, type in crypto conspiracy. I threw the word conspiracy right on it because, people, it's a conspiracy. He doesn't understand Bitcoin. Well, I'm an engineer and I probably understand Bitcoin more than most people. But again, I digress. In that crypto conspiracy, I did 30 podcasts on Bitcoin primarily, cryptos in general. Mm-hmm. And you'll find some things that we don't have time to go into, but like, who's behind Bitcoin really? How does MIT play into Bitcoin? Who are the guys that started Tether? Who's behind the guys that started Tether? Why is Tether so important to Bitcoin? Has it ever been audited? Do they really have the assets they claim they have? Yeah. Why is Bitcoin not doing its mandate? Why is it not a peer-to-peer anonymous autonomous monetary system for the people. It's a trackable, traceable, very slow and very expensive way to move assets between each other. It's failed at its man. Why is it that the whales are in there way over the average person? Why is it that Wall Street has entered Bitcoin syndrome in such a heavy manner? And why is it that Bitcoin isn't on the periodic chart if it's digital?
Yeah.
So you're a seller.
Some good points.
With how does one store precious metal?
Well, we could do it digitally just to get that in there, but there's several ways. One, I mean, you can go to an institution and you can have them store it for you. You can buy warehouse receipts off the exchange. So you could do it at the LBMA, you could do it at the COMEX or the NYMEX. And then there's private vaults, and then there's public vaults like Brinks or Loomis or Garda. There are several ways to get in what I would consider absolutely 100% the mainstream and buy metals and, knock on the door of, let's say, Brinks. Everybody almost knows who Brinks is, and say, hey, I've got, $3 million worth of gold, and, you storing it for me. I want to take it out. Give me, 500,000 worth of my gold, whatever. So there's that way. Then there's ways you could just take possession of it yourself. You could bury it in the backyard. People do that. I don't necessarily advocate you do or you don't. Again, I'm free market. I actually do think that people should have some on themselves in a worst case scenario. If power goes
Like a
out
necklace or something.
and you're in Florida and everything's on the up and up, but you got a 1 week and you're out, and it's the ultimate cash. So, you say, hey, I want to buy this gasoline, but the pumps are pumping because I got a generator, but the till's out and I can't take a credit card. Well, okay. Hey, the silver ounce right here is worth $40. Can I get, $5, or 5 gallons of gas? Yeah, you can, So I'm not saying it solves all problems, but it's the old adage, it's better to have it and not need it than to need it and not have it. So I've always advocated a small amount. I mean, you don't want to have, I don't know, 10 grand worth of gold on you, not necessarily on your person, but at your house. But you might. I mean, it depends on the person. Having a modest amount of it's actually kind of smart. Cash as well. I mean, if you went to that same gas station and said, hey, I'll pay you in, Federal Reserve notes, the guy'd probably say, sure, no problem. Let me pump it up for you.
Yeah, for sure. Yeah, it's interesting that I've had relatives and my grandparents had, gold and silver at home. And, my grandparents came from Ukraine and after World War II. So that era of not trusting government and all the things, right, kind of led into the same thought process of having, paying cash, having things on you at home from an investment point of view. But that's interesting.
The thing that, I'm sorry if I cut you off. The thing that I really strive to do, and maybe I haven't accomplished it, is that I'm not like, this is the only thing.
Yeah.
But it's sort of like having, fire extinguisher in your kitchen. How many kitchens catch on fire? Not very many. But when they do, and you have a fire extinguisher, holy moly, am I glad I've got this. Is the system going to fail? I actually believe at some point it will.
Yeah.
But that doesn't necessarily mean that I got to live my life thinking that in the back of my head all day. Because I've got that fire extinguisher. And that's all I need. I don't need a room full of fire extinguishers. I don't need to sell a fire extinguisher to everybody I know. I might give a few out to friends I really care about, but that's it. So I think it's the balance that I've tried very hard to put into the consciousness of the average investor, the small investor, the institutional investor, the money manager, the family office, even the certified financial planners, which is a hard nut to crack, because I'm not advocating anything outside of what history's taught us. All I've said really is parroting back all I've learned. It's nothing that I came up with, this original idea. Oh my God, we've got a new Einstein in the financial market. Are you kidding me? I'm not even close to that. All I'm telling you is I've studied, I've learned this, and I'm sharing the information. And if you understand it, you're going to take a small slice to keep that situation under control if it ever gets out of hand, and go about your NVIDIA, your Tesla, your options trading, your futures trading, your long-term planning, your private equity, your real estate. I don't care. That's a balanced portfolio. Like I said earlier, if you adhere to Ibbotson and Associates, we were about as objective as they could be. 15%, that's it. So it's not like I'm trying to advocate, we go here or there. Now I have to say, because the comments would say, well, wait a minute, David, you're on the sound money committee, and you're an advocate for sound money, and I am. But that doesn't necessarily mean what I just said is null and void. I do know from history that sound money does absolutely have a lot less discrimination than when the money masters have control and money goes by the trickle down. In a sound money system, the playing field is much more equal and level. But, again, I digress, but I just want to get that out there because, I try to be straight up all the time, everywhere, because, people seem to, in my opinion, look for, what they could trip you up on or what he did wrong, and rather look at what's right. I certainly don't think anyone agrees with me 100%. I don't even want them to. All I want to do is stimulate their thinking and absolutely want to help them. It's not like I'm a big silver dealer. I'm not. I'm a big gold dealer. I'm not. I'm a financial, advocate for truth, for freedom, and for basically self-reliance and self-sufficiency. And, the one purpose I'd say besides freedom is to get people to think. You don't have to agree, but at least you got to think this stuff through.
Yeah. No, I think that's definitely, I'm glad you brought that up because I think just even through my career in finance, you talk about diversification in a portfolio. It's stocks, bonds, mutual funds, it's all paper assets. Well, what about gold and silver? What about real estate? What about businesses, right? That's a true diversification. But obviously when you say that, then you get people angry.
Well, one of the things we're looking at, sorry you get me excited, but, what I do when silver peaks or it gets overvalued, and I think it will. And the answer is, I don't know. And again, it's an individual choice, but I think a lot of guidance would be in business. Because if to think about true capitalism or conscious capitalism, I like to refer to it, is it's a win-win. I'm serving myself. I started this business. I worked really hard, probably put in more hours than most people are willing to. And out of that success, I become wealthy, or my lifestyle gets better. I have a higher standard of living. But at the same time, I'm giving you a higher standard. That's a win for you, and that's a win for me. That's the paradox of conscious capitalism. So again, coming back to what you said, and thanks for the trigger, I think there'll be some opportunities in business where people are over leveraged and didn't manage well. And we've got cash and they want that cash. We're buying that business for 80 cents, 7 cents. And it's a win-win because look, you're cashing me out. No one else can afford it. I'm getting silver instead of fiat. I'm not trusting the current system, or take the fiat. I don't care. Make the deal. And now, I'm off in it, or I was going to discount it anyway. My kids don't want it. I mean, there's lots of scenarios we could go through, not to visit them all. Yeah. And yet here we are. So we can, if you want to say restart and really reprice. Remember, in a total, absolute 100% financial collapse, people fear that a lot. And this is, the doomers, but an absolute 100% financial collapse, everything stays there. There is no economic change as far as all the buildings are there, farmland, oil, wheat, sheep, corn, automobiles, cows, churches, everything's there. What happens? It gets repriced. That's what happens. Instead of having a PE of 200, maybe it gets a PE of 10. Well, that's a 20-fold decrease. You just lost 96%. Sorry, folks, reality just set into XYZ stock. It's a business. You should look at it as a business. Are you going to pay 200 times what this company earns? I mean, you're supposed to look at a company based on their earnings. And, Warren Buffett does that. It's called payback time. And how many quarters, how many years will I pay back the cost of what I put into this business? I put in, 200 million. I'll get 200 million out of it in 8 years. That's an 8-year wait. That's a good business decision. So anyway, again, I may run off the rails a little bit, but I think like a business guy. I am a business guy.
Makes sense.
I'm not against business. I love it. especially the win-win scenarios I just outlined. The problem is if you can't trust the currency, then what do? Well, you hedge. You put a little bit that you cannot burn up or blow away or reprice, and you move on. And so most of the people that subscribe to my premium service are small business owners because they've outworked the average person for passion usually. And they've contributed to themselves, their families, and others. But they don't want to lose what they work for. So they know the preservation of what they've built up demands that they take proper action. And that's where you'll find most of my client base.
Mm-hmm. With you mentioned sound money, now, or we've talked about it, but kind of talk to us about kind of what would be your kind of ideal vision for sound money?
Well, I think it'd be a transition. I think that, if you go back to earlier history, I mean, why did a loaf of bread cost the same amount for 100 years? Because we're on a gold standard. Mm-hmm. That's why. So it's really a way that you don't need financial planners. I wrote about in the Silver Manifesto, but if you're on a sound money system, then you actually get a gentle deflation, which means that ounce of gold that you had in your 20s when you're 60, and then you're 40 years later, it's going to buy at least what it bought you in your 20s and really more. Why is that? Because of the human experience. We continue to improve, the old adage about a better mousetrap. I mean, look at the iPhone. You look at the iPhone 3 and you look at the iPhone 16, and they're very different, but they still make telephone calls. Now, so the productivity increases. We keep bettering the washing machine, the automobile, what have you. So what you get is that productivity increase. You get better efficiencies. You get wider margins in some cases. And because of that overall continue more or less up and down progression, that dollar actually goes further because the dollar's constant. So that gentle deflation actually helps benefit everybody's standard of living increase and increase and increase over time. That's what it does.
Yeah, thank you. This has been great. So David, what are some common questions that you get from, the clients that you work with, the investors?
Yeah, right now, I mean, it's probably been the same pretty much from when I started on the web 25 plus years ago. And now one is now a good time to buy gold and or silver. And I would say right now, if you don't own it, yes. The answer is always yes if you don't own it. Yeah. If you've owned it in the past and your average price is, half of what gold is now, or, a third of what silver is now, and you bought enough back then that, 10% or whatever, yeah, I would say no. But if you don't own it, yeah.
Follow up to that is how would you recommend somebody buy it?
I think dollar cost averaging, if you want to look it up on the web.
I mean more so like, do you recommend they buy the physical?
Yes. I've always advocated, even though I'm not a dealer, that you start with the physical metal first, because that's a situation where, as we talked about, in a worst case scenario, so I wrote the Rules of Investing book as a participant for the silver expert. And so if you type in on a search engine, 10 Rules of Silver Investing by David Morgan, it'll pop it up for free. And in the first rule, I say, no one wants to be gloom and doomer and predict a financial collapse. But in the unlikely event of a financial conundrum, silver will become the money of last resort because gold has a too high a price unit value. So silver would be used in everyday transactions. And on that basis, I advocate everyone have a little silver on hand in this unlikely event. So that's the essence of what I wrote for rule number.
Mm-hmm.
The other question I
get
get,
a couple more for us.
Yeah. The other one is like, well, how much, and typically recommended 10%. In that 10 rules of silver investing, the last rule number 10, is too much of a good thing is too much of a good thing. You don't need to go all in. 10% is probably enough. I moved that up to 20%, which is between the Ibbotson ratio, which is 15. But depending on the risk tolerance and worldview, if you're concerned about systemic risk or a currency debasement, I lean toward the higher percentage, would be toward 20%. Gold protects your wealth. Silver offers leverage. So I consider your age, If you're retired, maybe you're all gold or mostly gold and some silver. If you're young and you're willing to take on more risk, you might favor silver. Silver hit $50 again. I think it's inevitable. I mean, if you look at the $50 price that hit 3 minutes in 1980, that'd be about 170 a day using the government CPI. If you use the 1980 metrics of 1980s inflation index, it'd be far higher than that. What's the biggest risk in holding metals? The main risk in metals is having paper metal, having a claim on silver rather than silver or gold itself. That's why I say you should buy the real metal first. You don't have to go all in. Let's say you're going to put 10% in the metals market. Maybe, 3%, 5% could be in physical metal. The other 5% could be in, ETFs, mining shares, leveraged ETFs, options, or something like that, if that was your choice. And isn't gold outdated? I mean, I get that all the time. It's a pet rock. No one uses it. Central banks do. But anyway, so it's actually quite the opposite. Gold is more relevant today than it's the one asset held by every central bank because it's nobody's liability. In a world of digital everything, gold is the one tangible thing you can trust. Silver as well. It's not a relic, it's a reality. And that's a reality check on.
Yeah. Yeah. I like that.
Cool. So, David, I have one final question for you before we wrap up. What do you see as, a possible catalyst for, eventually we're going to have an economic downturn? It seems like we can't have any more, but, eventually we will. What do you think kind of will be that catalyst?
Well, there could be several. Obviously, I've thought about it often. And so one could be a cyber attack, either on a certain location or maybe a money center bank. I mean, it wouldn't take much for a major foreign exchange facility in, Switzerland or London or New York or somewhere else that would cause a disruption in currency trading. That would be one. Another one, of course, could be a power failure of some type, either man-made or, sunspot situation where you get an EMP. That would be another. Another would be a failure to deliver. If you had a big gold delivery or silver delivery or something along those lines and the failure was there and it was broadcast widely, you could cause a problem, maybe not a severe one. The market would know more than me. Same thing on the Fort Knox situation. I mean, it might be a ho-hum. I mean, some people just say, so what if we don't have any gold? The dollar was cut from gold August 1971. Under the Nixon administration, we're doing just fine, which we're really not, in my opinion. In some ways, we are. I mean, I don't want to say that without gold, everything, is horrible. It's not. I mean, we've made a lot of progress. But we also have a lot of distortions. I mean, we've never had this discrepancy between the rich and the poor and the middle class getting wiped out. That doesn't happen under a sound money system. So I would say those three. The other ones are just basically an edict where the powers that be say, look, a new financial system is required. We had this problem, fill in the blank. I've given you three. And we're starting a new system from April 1st, 2026. You have these following months to get your affairs in order. We'll be running the old system, but the transition at that time will be all digital. You must have your real ID. You must get your retina scanned at the local post office, and you will be in the new system. Up until that time, we'll run the two systems parallel. I think that's a more likely scenario, but no one knows.
Yeah. Well, that's good. Let's end on a positive note. What anything that's exciting for you right now? Anything you're looking forward to? TV shows, movies, anything?
Yeah, I'm very excited. I've been working for almost 2 years on my documentary called Silver Sunrise, and
wow.
I just watched the final rough cut. And there were a couple, I won't say glitches, but things I wanted to change in it.
Yeah.
And I really like the way it's ending because it has to do with consciousness and our ability as human beings to basically overcome anything, and that it's our choice to have money as more of a control mechanism about the stress and fear of money, stress I don't have enough, or fear I'm not going to get enough, or whatever. and how we can really turn that upside down where we, the people, actually know we're in and of ourselves enough and that the universe is infinite. There's actually abundance for everyone. And all we really need to do is get on the right path and bring that back to humanity. So looking forward to putting that message out because really the human experience is one that we all suffer. We all have our goods and our bads. But overall, I mean, there's so much magic in just being a human being. And a lot of people are taught not to value themselves, which is kind of a heartbreaker for me because, when you get down to how you started, you won probably the greatest race that ever existed. And that's a sperm race. I mean,
Yeah.
how many million sperm are out there? And you're the one that hit the egg to produce you. So value yourself, value each other, value every day, and realize that this, let's say, I'll call it a tough spot financially or currency wise, has been addressed many, many times before. And we've always gotten through it. And we'll get through this one and hopefully break on through the other side. And let's say that silver sunrise where everyone has a bright future.
Well, that's great.
Yeah.
By the way, when was that going to be released soon, or any news on that?
Yeah, I'm going to, once we get the final version, I'm going to give it to my premium members, probably past and current, everyone that's ever bought a subscription. I'll let them watch it for free on my platform, and they can give me feedback, good, bad, or indifferent, just kind of as a courtesy to them. And then once that's accomplished, I'll probably wait 2 or 3 weeks, and then I'll just launch it for the public.
Amazing. That's great.
Yeah. I love it. Awesome. Well, David, thank you so much for joining us. Where could people go to connect with you and learn more about the Morgan Report?
Yeah, so you're going to go to the website. It's going to be themorganreport.com/alt, A-L-T. And so again, that's themorganreport.com/alt, A-L-T. And it could be lowercase. I think we'll put in both upper and lowercase. We'll prefer lowercase. And you will get a landing page with some special gifts for your audience.
Oh, amazing. This has been great. Yeah, this is, we'll make sure to put all that in the show notes, David. And again, thank you for your time. This has been a fun conversation. And we'll make sure, like I said, to put all that in the show notes for the audience.